Hello and welcome to the week ahead. Today I'm joined by Sebastien Galy, Senior Currency Strategist at Societe Generale in New York. First of all, let's have a look at the RBA meeting on Tuesday. 10 out of 16 economists surveyed by Dow Jones Newswires anticipate a rate cut of a percentage point to 3.0%. What are you expecting, Sebastien?
Yeah, actually, if you look at the pricing in the market, it's about 92% chance of a 25 basis points. So a strong conviction in the market that it actually will be a cut at this point in time at this meeting. We kind of disagree on the timing of it. We expect that there will be some form of cuts, indeed, as it's being priced into the market, maybe a little bit more. But the timing is really the issue. They've gone through that easing. They basically have to look ahead through the fiscal cliff. And then before, basically, they need to ease. And it probably is a smart thing, basically, to wait for the effect of the fiscal cliff to see whether they need some further easing or not, and basically just to wait it out to see what is the size of the shock. It is a very asymmetric type of shock in the sense that if the fiscal cliff is a non-event, economic data tends to be actually relatively good in Asia and even to some extent in Australia, and they are. And it's looking fairly good. So the case for aggressive easing in the very short term is not as strong as it could be made. They have been unhappy with the level of the currency, which is pretty clear, and it's not really very clear that a 25 BP cut will actually have a major impact on the currency. As we can see right now, most of it is already priced in, and the currency is actually not really collapsing by any shape or form. So they're a bit of in a bind, and that means that the probability is more that they will delay these rate cuts probably into next year and probably at the beginning of next year. If there is, of course, a fiscal cliff event, then they will probably act very aggressively and extremely fast, specifically because the Aussie is so bought in the market and is very expensive, and that way by cutting aggressively and being extremely dovish, it probably would have a good chance to collapse their currency. That is a very low probability event.
There is also some Eurozone data out this week, including Eurozone Producer Price Index, Eurozone retail sales, Eurozone GDP, and a rate decision on Thursday. How do you think this data will shake the markets this week, and are you expecting the ECB to leave interest rates unchanged?
Yeah, I think it's consensus here in the market that the ECB will do nothing, which probably will be a non-event. The only good news, it seems that Spain did ask for its rescue package, so we're going into the mechanics of probably the rescue mechanism. So that I think that's a positive going forward. That might be the interesting thing, interesting point to look at. Otherwise, basically, rates are ultra low, and it's not really clear what they can do on the pure rate side. It's really these rescue mechanisms which basically give them most of the boost, eventually either by not being acted on or eventually being acted on to basically liquidity conditions within the peripherals, and therefore broad liquidity conditions in the Eurozone.
Many expect the Bank of England to hold interest rates at 0.50%. Do you agree with this prediction?
Yeah. Typically, the Bank of England essentially eases and then stays on hold in the next meeting. There has been some form of technical easing in the sense that there's been some of the profit for the gilts which are being transferred to the government. Of course, that doesn't necessarily mean that most of the money is going to the government soon, but it is a form of easing of monetary conditions within England. So typically they're basically on hold, and then they have Mr. Carney coming in from Canada. So that means there's probably more of an incentive to not do anything in the very short term and play it out for time.
The Bank of Canada has a rate decision on Tuesday. Canadian GDP data showed its economy expanded at an annual rate of 0.6% in the third quarter. This is far lower than the second quarter's 1.7% and well below the Bank of Canada's 1% forecast. How do you think this result will impact Tuesday's decision and the Bank of Canada's hawkish tone, which they have maintained for most of 2013?
Yeah, the hawkish tone is always an interesting one because it's very much in the back end, in the sense that it's not we're going to hike anytime soon, it's we're going to act under some conditions and at some point in the future. So their point was basically to control expectations in terms of interest rates and expected inflation in the future, which they've done very well. It doesn't mean that they've been a very aggressive hikers. They basically moved from ultra-easy conditions to less ultra-easy conditions. They have an issue in the sense that much as the RBA, they are left with a U.S. economy, which is either can go much better or can go much worse. in the sense that the fiscal cliff, if it does go through, will be a very large hit, and therefore they will need to do something fairly aggressive. If the fiscal cliff is a non-event, they're still dealing with the fact that the investments have been postponed in the U.S. and therefore having some impact on Canada. But that will basically recoup into Q1, and we'll see basically the payback on that one. So it's going to be difficult, more difficult than it has been for the past few years for the Bank of Canada. It just means that it's going to be on hold for a fairly long amount of time, more than was expected only a few months ago in Canada.
And Sebastien, in terms of movements in the markets this week, what should traders watch out for?
I think it's really purely market driven in the sense that we're seeing the euro up higher, which is basically driving some move in the short dollar, long euro position, and continue move in that direction. If you look in the currency space, the biggest position is yen short. These yen shorts are not being damaged or by whatever is happening, in the sense the market feels comfortable being yen short. If we would see the yen start to appreciate, then it would have a significant impact all across the market. So that's the one to watch for in terms of movement.
Thank you very much, Sebastien, for sharing your expert analysis with us today. Stay tuned to Dukascopy TV this week, as the TV team will keep you up to date with economic news and forex updates. Enjoy the rest of your evening.